simple, ugly truth is that no one can really help you. They can comfort, soothe you, but cannot truly understand. And that's okay. With time, eventually life will regain its color. But know that it's okay to make progress, and know that it's okay to lose progress. And have bad days where you can't cope.
Ladies and gentlemen, welcome to This Week in Crypto on August 13th, 2021. I'm your host, Brian, alongside my co-host, Dino. There has been lots and lots of good news coming out this week for crypto. If you like price rises and surges and altcoin gains in particular, you have enjoyed the last 7 days quite a bit here. We'll jump into a few of the altcoins that have really been booming. Cardano has been on a lot of people's minds for good reason. It's up almost 50% in the last 7 days. As we can see, almost uniformly, all of these altcoins have jumped up, most in the double-digit percentages, and just a few that are just underwater over the last 7 days. But we can see very clearly Bitcoin is up almost 14%, Ethereum 16.5%. As I said, Cardano here at 47.5%. XRP had a nice standout week at 41%. Axie Infinity, let's see, Holo, Sinfin, Ravencoin, and then of course this huge spike for IoTex. If you were in IoTex, you really enjoyed quite a week at plus 345%. So we're going to go into not just price changes, of course, but many of the on-chain and social metrics that you guys monitor on a weekly basis with us, and talk about how the markets actually look in terms of health, how much of this rally is justified, how much of it may be getting people to FOMO in, but without full reasoning for prices to go where they're going right now. And of course, I want to remind everyone that we're always here to show you what the data is showing based on history and evidence, not necessarily give investment advice. That's not what we're in the market for. We're here to educate and show how to use our data, metrics, and charts to their full potential, and nothing more, nothing less. So yeah, really, Bitcoin is very close to hitting its 3-month high. It's been ranging right at about the 45 to 46.5K level over the last few days, and it's back at that 46.5 mark right now. 46.6 was right where it about topped out just in the past 24 hours ago. And if it does reach, as we can see here, if it does reach this level and go beyond, that can be a good resistance level breaker for a lot of you TA traders out there who are waiting for that range to be broke. And it very well could, of course, then surge to 50K and beyond. The question is, do we have the on-chain activity going on behind the curtains to justify that? And that's always going to be a complicated question. We have to look at as many different graphs and metrics as possible to see if there are hidden increases in activity and signs right and left that we can surge above and beyond. Of course, with crypto metrics, it can be twofold. We can have on-chain activity increasing and then price follow up. Currently looking at circulation right now, if I'm highlighting just Bitcoin here in pink, we're not really seeing any sort of major uptick in circulation right now. However, if we do try to really surge toward 50K and beyond, that can always, in hindsight, cause people to FOMO in, and then the circulation increases to allow those prices to sustain itself. So it's going to be difficult to really recognize whether it makes sense if Bitcoin starts to really climb toward those all-time levels we saw back in mid-April. But right now, just based on history, we're not seeing circulation rise enough to say it's only a matter of time right now. There could very well be a breakdown around here. We can very well see ranging for the next week or two while altcoins continue to get all the attention, kind of like we've seen over the last couple of weeks. A lot of scenarios can play out. So based on circulation alone, I don't see enough here. Dino, anything you'd like to comment in terms of circulation, and then we can sort of look at address activity around the same time?
Yeah, so for people that are obviously unfamiliar with the metric, let's start there. Circulation, for those uninitiated, is the measure of the amount of unique Bitcoin that are moving on the blockchain on a daily basis. So the idea is that you look at circulation as a proxy for really the amount of value that is being transferred on the network daily. The circulation is also the main sort of parameter with which we calculate NVT. NVT ratio is essentially a metric that tries to measure or evaluate whether Bitcoin is over or undervalued based on the relationship between Bitcoin's market cap and Bitcoin's circulation. So the idea is if Bitcoin's market cap is very high, but the amount of unique tokens moving on the blockchain or the amount of value being transferred on the blockchain is relatively low, then Bitcoin is overvalued according to this metric. And then if Bitcoin's market cap is low, but the amount of value being transferred on the network is very high, then Bitcoin is currently undervalued according to NVT. And NVT is a very popular sort of somewhat established on-chain metric now for measuring sort of Bitcoin from a very particular perspective. But that perspective at the moment, yeah, like Brian is saying, on-chain wise or sort of circulation wise, we're still in a relatively red territory according to Brian's NVT model that you can see here on the screen. It's another month, I think like 5th month in a row that Bitcoin circulation is, or NVT ratio is very low, suggesting that at the moment or at this point in time, we have still not seen sort of new money moving into the market. We are still not seeing a recovery in terms of network-wide activity of Bitcoin holders. It seems like most people are still the mentality is still to hodl, which is not necessarily bad. However, previously or historically speaking, many of Bitcoin's rallies, especially sustainable rallies, have seen an increase in daily circulation, have seen an increase in the amount of value daily being transferred on the network, right? We are still sort of not seeing that particular part of Bitcoin's network activity rise, right, Brian? Is that what you would say your NVT model there is showing?
Exactly, yeah. This is the 6th month in a row where we're seeing red. Obviously, this can change. This is the first 12 full days of August that is displaying right now, giving this red signal. But overall, historically, when we see these long stretches of red, there's eventually, a bit of a slide in price. We saw the big one here in 2018 where prices were sliding down, big one in 2019. And then here, this 3-month one, we actually had a very mild increase before it turned neutral and then semi-bullish. And as soon as it got semi-bullish, just skyrocketed. That's when we had our big all-time high that eventually halted right when we had our first month of red. When we did get that month of red, we started to have the big 3 months in a row of decline. And then last month, despite the fact that we had our worst circulation month, NVT-wise, we had a rally. And we're continuing to see a mild rally. Right now, it's even though it does look like it's going higher, like the green is the highs of the month, the white is the average, and the red is the low of the month. This isn't really much. It's kind of a mild swing. And if this NVT bar stayed up here, it would be extremely surprising if we just saw a continued bounce up to 50K and beyond. It's not impossible. I'm just saying, based on history, NVT does a pretty accurate job of predicting whether the markets are healthy or unhealthy and whether prices can continue to just churn upwards. So it'll be interesting to keep an eye on. We can take a look at Ethereum really quick as well, and we can see kind of a similar story. These bars are orange, which represent semi-bearishness, not quite in this red territory where we saw Ethereum really decline to as low as 130 back in December 2019. But it's the 3rd month where we haven't really seen much circulation compared to this year-long stretch of green, essentially. But despite that, we are back up at an average of 3,043, which actually the average prices this month have even exceeded the month that we had its all-time high back in May, where the average was around 2,700, because if you guys remember, it was pretty short-lived up there. So this interesting bounce on this white line is going to be something to keep an eye on. Again, it's not really in red territory, but semi-bearishness, as we can see here back in mid 2018 for these 6 months, it did lead to a price decline, whereas green will very often lead to that big bounce, just like we saw back there and back there.
So yeah, for Ethereum in particular, obviously NVT ratio is a bit more nuanced, specifically because Ethereum has various other potential use cases. There is a variety of staking mechanisms for Ethereum. For example, ETH 2.0, a lot of DeFi, different DeFi protocols where you can basically just put and park your Ethereum, and it would still sort of be a potential use case for the coin, and it would still sort of provide value for the network in general. So that needs to be taken with a grain of salt. However, even with that sort of in mind, it does seem that both for Bitcoin and Ethereum, we're still sort of lagging behind in terms of general sort of value transfer. Right. The only thing that really to me that this is saying is that we're struggling with onboarding new blood for another 50 and 60K push. And this is what might be difficult for BTC to overcome. And I think in line with that, Brian, maybe let's look at the amount of unique addresses interacting with both of these networks. So we can start with Bitcoin's daily active addresses, which, I mean, it's a tricky thing to analyze. Maybe it's better to look at rolling 24-hour addresses. Brian, just to kind of really zoom in the last week or the last couple of weeks to see what has been the total amount of unique addresses on a 24-hour level interacting with. By interacting with, I mean sending or receiving Bitcoin. So yes, we can see, maybe zoom out to the last year, Brian, just so we can see where we are now compared to this time last year and compared to the first 6 months of 2021. What you'll be able to see is that we are still struggling to get back to these levels of network activity that we have seen throughout between like January and May of 2021. Really, in the first 5 months or 4.5 months of Bitcoin's price action, there have only been, I think, 4 or 5 days that the amount of unique addresses interacting with Bitcoin have fallen below 1 million. So, cue the market-wide drop on May 14th, and since then, you can count also on a number of, on one hand, you can count the amount of days that the amount of unique addresses have been above 1 million overall. Now, 1 million obviously is a somewhat imaginary or sort of irrelevant threshold. It's still, however, a pretty decent gauge of where we are now compared to where we were throughout the first 5 months of the rally, and what is the level of engagement and by proxy, perhaps a level of interest in Bitcoin on a network level right now compared to, I don't know, us recovering from 40K last time in February, right? So on the one hand, what I feel like is slightly optimistic is the fact that we are, at the very least, as you can see here, charting higher lows on a daily active address chart. So each of these dips over the last maybe 2 or 3 weeks are the weekend dips in daily active addresses. So most protocols, including Bitcoin, Ethereum, you will see these frequent drop-offs in network activity. These are weekend drops, and it is very sort of expected, and it is more than natural for the amount of addresses interacting with the network to drop off over the weekend, right? So each of these essentially points to the amount of sort of the floor level of activity for BTC. So that floor level has been increasing over the last basically since the start of August. I think even mid-July to now. The floor level of Bitcoin's network activity or address activity has been increasing. And also in the last week, since Monday, we're up by about plus 15% in Bitcoin's daily active addresses. So yes, we're still relatively low. At the moment, you can see that Brian is showing that the current amount of addresses interacting with Bitcoin in the previous 24 hours is 830,000, which is still ways away from this imaginary line that I've drawn of about 1 million daily active addresses. But we're at the very least sort of plugging into or sort of moving into the right direction. Now, I would still like to see a more thorough and robust increase in daily activity on the network. That's probably not going to happen over the next 24 or 48 hours because we're just moving into the weekend territory, and we're probably going to see another drop to about 750,000 in terms of Bitcoin's daily active addresses. But in the next 2 or 3 weeks, personally, I would say, or I would keep an eye on the general amount of activity in terms of the amount of addresses and entities interacting with BTC. If it continues to rise, to me, that would point new blood moving into the market, people sort of reviving their interest in trading and transferring value on the Bitcoin network. If we don't, that might point to a bearish divergence. So active addresses declining, but Bitcoin's price rising would suggest that there is not a whole lot of fundamental justification or network level just support for another push above 50K. So in short, I'm somewhat optimistic because Bitcoin's daily active addresses have slowly, lethargically started to rise on a daily level. However, we're still ways away. We're still ways away from what we've seen throughout the first 4 or 5 months of Bitcoin's price activity.
Yeah, I'm just going to add a little moving average. I'll try the 30-day average just to see how that looks here. But this gives you a little indication of what Dina's talking about, where there's been a mild rise over the past, looks like 2 weeks or so, give or take. And we'd call this essentially kind of a neutral divergence right now because the price has bounced. And right when the price really started to bounce, maybe a couple days after, the pattern of address activity has started to rise. But it's not a massive one, and it's not nothing either. So this is kind of what's expected. I would actually say it's still a mild bearish divergence because it's, based on where we were compared to now, the price is jumping, maybe halfway back to where it was at the all-time high, whereas the address activity is only jumping maybe 10 to 20% back to where it was. So it's all kind of a math problem a little bit, but generally speaking, we're going to want to see that 1 million plus kind of output on a daily basis, as Dino was saying, to really feel as though it's time to get that rally going again and potentially go above and beyond the all-time high.
Right. So that being said, these two and a few other indicators of ours aren't necessarily the most optimistic for Bitcoin and its rally above 50K. Now, I would like to talk about a couple of indicators that I've been watching that are possibly a little bit more optimistic. So one, Brian, that I think we can touch on is the amount of, basically, first of all, exchange inflow for Bitcoin and then supply of Bitcoin on exchanges. So basically, what I'm also keeping an eye on is what is the amount of BTC that is flowing to known exchange wallets as its price continues to rise, because the premise is if we are going to see a strong pullback or a general sort of a challenge to this rally, it might come in the form of new BTC or sort of a BTC in general moving away from private addresses into exchange addresses, which would suggest a sort of a rising desire to sell and offload your bags and start claiming profits. So we have seen sort of an uptick in the Bitcoin's exchange inflow before this first pullback. I think it was on like July 27th, 28th. Since then, however, right there we go. So July 27th. Since then, or over the last 2 weeks, Bitcoin's price has continued to rise, but the amount of BTC moving to exchanges on a daily basis has actually been in a slight decline. Now we can also look at the net flow, and Brian, let's look at exchange flow balance for Bitcoin, which essentially tracks the amount of, or the difference between the amount of BTC going into exchanges, or at least the addresses that we have labeled as exchanges, and the amount of BTC moving out of exchanges. And I think you will also see that over the last 2 to 3 weeks, most of these large moves, anomalous moves, have been to the downside, suggesting that on the whole, the net flow is in favor of Bitcoin being withdrawn from exchanges more than moving into exchanges. So the last sort of metric that we might want to plug here as part of this discussion is the supply of BTC on exchanges overall. So we can maybe show the supply of BTC on exchanges. Yeah, there we go, as percentage of total supply. Perfect. So we are seeing, first of all, we're seeing this one massive drop, which I'm not exactly still sure what it's about. It might just be one or two very large addresses withdrawing parts of their funds from an exchange wallet. But even if you ignore that one specific very strong drop off, in the last 2 weeks there hasn't been an uptick in the supply on exchanges. In fact, if you look at what happened during the May correction, you can definitely see a clear increase in the supply of BTC on exchanges as people started to capitulate, as weekend started to get out of the market, and in general it suggested a very bearish bias, bearish consensus, and people being scared of prices moving down further. And as a result, people were moving their BTC to exchanges to sell and get out of the market for the time being. We are not seeing the same type of sell side pressure in the last 2 weeks. So in the short term, I think that could be a relatively hopeful sign that, I personally think that if we do get to 50K, we're going to probably see a strong move upward in terms of BTC and its availability on exchanges. But for the time being, at least, it doesn't seem like 46K is really the level at which on a network level or in terms of on-chain metrics, we are seeing sort of this major propensity of people to start, and entities to start selling their BTC. We're not seeing any sort of major increase in sell side pressure in terms of Bitcoin's exchange metrics. And as a result, Bitcoin bulls might have less of a sell wall to absorb moving forward. So yeah, keep an eye on the exchange metrics for BTC over the next week or so. But for the time being, at least, sure, Bitcoin's network activity is lagging. However, we are at least not seeing this massive push to basically drop Bitcoin for other assets or move into stablecoins, which might be actually a positive sign for BTC. Now, keep in mind, Bitcoin's market cap dominance has fallen by 2% in the last week. So other coins have gained on top of BTC, which to me suggests that there has been a little bit of a lackluster interest in BTC. However, I reiterate in terms of what our network activity metrics are showing, that lack of interest has not translated into sell-offs of BTC or increased sell-offs of BTC. Sure, this doesn't account for BTC that is already on exchanges, but we're not seeing increased sell-side pressure compared to what we've seen 2 weeks ago. So that, at least to me, Brian, is relatively hopeful for Bitcoin's chances of bursting through 50K again.
I agree. Yeah, this is absolutely a positive sign. We can see very clearly just by doing a little pattern recognition based on history, these types of drops have historically led to fairly immediate rallies when they happen. We saw one, let's see, the biggest one, of course, was back in October, huge drop off where we went from about 14.5% all the way down to 13.3% on exchanges. And with that came a huge rally, ranging between 13K all the way up to 16.7K and even beyond, even after it was just starting to uptick a little bit. Another big drop here, which actually interestingly led to a decline followed by a bounce. But this rise outgained what this drop did in terms of falling. So that kind of made sense there. But in general, when you're seeing the exchange supply dropping off, usually is a good sign. It at minimum implies that there is less risk of a sell-off because there is literally less coins on an exchange in order to sell. So good sign here for sure. We can talk a little bit about what coins are getting some increased dominance, but I did want to touch on whales right before we do. Then I think, what we can do is transition right into some altcoins and
yeah, Francois has been asking in chat, what about ADA? We were discussing before the call, some very specific metrics for Cardano that are a bit concerning. But yeah, let's touch briefly on what we're seeing in terms of whale activity for BTC before we get into other coins, Brian.
Yeah, for sure. We'll definitely do a little bit of ADA talk here because it's the talk of the town at the moment. But right before we do, we're looking at Bitcoin's 100 to 10,000 coin holders and their percentage of supply held in terms of total Bitcoin. So these addresses are obviously considered whales. Some have debated, whether 100 Bitcoin wallets are actually in the whale category. My belief is yes. I think that without a doubt, anyone holding $4.5 million of any crypto asset has some sway on where prices move next. So based on history, looking at these groups of asset holders, we can see that they do have some sway on the markets, if not the most of any group that we've seen in Bitcoin. When they tend to rise in terms of supply held, the price tends to rise along with it. When they finally start to take profit, tops hit. That's exactly when the all-time hit was, just 2 or 3 days after this line started to take off. Now, keep in mind, historically over time, this group continues to own more and more supply, even going back 5 years. But when they do start to take profit, that very often is one of the best leading indicators that we're going to drop off. This one right here, when we saw a single day drop off from, it was just about 0.13% of the supply, and doesn't look like a ton. But right after, like the day after, that's when the plummet started and they were taking profit as the prices were dropping down. And this right here, for example, was a good leading indicator that the rally wasn't ready to start yet in terms of price. And then all of a sudden, boom, we had this huge day of accumulation again when the whales decided, all right, this is close enough to the bottom for us. They were around 33K or so when that happened. We had one more tiny little drop off, got to under 30K, which shook a lot of weak hands out as kind of a psychological support breakdown. And then right here, especially the 3rd and 4th weeks of July, we saw this huge accumulation to get to a new all-time high in terms of percentage supply held. And ever since, the price has sort of caught up with that. And then just about 3 days ago, we saw the big, I guess we could call it a mild profit take, where we went from 49.17 and we're back to about 48.95%. So it's not a huge drop off by any means, but this is the first time that we saw any sort of significant drop in the supply held by these holders since, I guess you could say mid-May with this drop off here. There were a few kind of minor ones here, but this is worth paying attention to because it could be the start of a little bit of profit taking. I'm not going to predict the future, though. We could very well just resume and start to climb once again with this tier, but we're getting very close to the 100 to 10,000 Bitcoin holders holding just about half of Bitcoin supply, Dino.
Yeah, so causation, not necessarily correlation, but 24 hours after that drop in the amount of BTC being held by these large addresses, we have seen Bitcoin drop from 46.5K all the way down to 44K, retesting that support level. In general, I think usually I don't give too much attention to like single spikes or solitary spikes in this metric, because it can point to a variety of different things, not necessarily showing general sentiment of whales overall. What I do, however, like is looking at the overall trend for the behavior of large Bitcoin holders and their general accumulation or distribution sentiment over time. And we can clearly see that the trend has been upwards since the drop. These addresses have accumulated quite a bit. I think it was about 120,000 Bitcoin since the correction that they have added, in addition to what they already own, that they have added to their addresses. So that's a pretty strong sign, to me at least, that they are comfortable with accumulating more, or confident at these levels that they will get their money back and then some. Now, yes, like Brian said, there has been a fairly sizable drop a couple of days ago, right before this drop of BTC from 46.5K all the way down to 44 before we were able to recover. I would keep an eye on it. For now, the general trend is still pointing to accumulation. So hopefully, as BTC continues to rally, if it continues to rally, we are going to see another sort of stretch accumulation for these addresses, because like Brian said, first of all, these addresses have accumulated a lot between October and May. October 2020 and May 2021. And this is one of the reasons why, first of all, it very much fits the narrative that we have been spoon-fed of the fact that it's the institutional investors that have been mostly behind this 2021 rally, because these large addresses are the ones that have seen the most gains in their cumulative balances over between October and May 2021. So the moment that they really started offloading was in May of 2021, right before the all-time high of BTC. We have seen about a 60,000, I believe, 40 or 60,000 BTC. I can't remember at the moment. Data where Brian is just showing. Let's say it's about a 60,000 BTC drop in their cumulative addresses, signaling for the first time a significant paradigm shift in the behavior of these addresses. And then that lasted for a month and a half, basically throughout the entire correction, suggesting that overall, as the market was sort of showing signs of exhaustion, so has the whale's sentiment. Since then, right around at the start of June, at the end of May, we are seeing a complete reversal in the behavior of these addresses, once again starting to accumulate. Yes, it hasn't immediately sort of moved into another sort of another push above 30K, 40K, and 50K, because that's not how markets work. But overall, it has pointed to another stretch of accumulation, even slightly similar to what we've seen between October and January of 2020, October 2020 and January 2021. So I'm definitely still optimistic. Yes, there are going to be sort of short-term ebbs and flows, short-term profit takings here and there, but overall the trend seems to be on the upcline or the incline. So I hope that it remains so as we move into the third week of August, Brian.
Yep, good stuff, Dino. Why don't we jump over into some altcoins, beginning with what everybody's talking about, which
just
is
before
Cardano.
we go into Cardano, I see BitChain Research has asked us to look into BSV a little bit. Unfortunately, we don't have on-chain data for Bitcoin SV at the moment, so we can't really dive as deep into BSV metrics as we could into things like Bitcoin and Ethereum. So yeah, we can do similar so we can do similar things like we can for Cardano, which we currently also don't support on-chain data for. We can look into social data, development activity data, other sort of angles of information that we provide. But on-chain data in particular, we have limited exposure to Bitcoin SV at the moment. But let's talk about Cardano right now, Brian. Massive spike or sort of massive gains, plus 46% on the week. However, its price is not the only thing that's been pumping, right?
Yeah, we're seeing the biggest uptick in social volume, which is the total amount of, Cardanos and ADAs that are mentioned around public social medias. We include social volume tracking for Twitter, Reddit, Discord, Telegram, and then a few pro traders chats. Combine them all together, and we come up with a metric here that allows us to see just how often they're mentioned over time. And this blue uptick here is the largest single point of time that Cardano has been talked about since mid-May, right before the big price correction that happened for basically all altcoins. This was around Ethereum's all-time high mid-May. Pretty much almost all of them had this big drop off right here. So these big two social volume spikes for Cardano happened right before its big all-time high that occurred on May 15th for around $2.42. We're back there. It doesn't mean that this is suddenly going to be a huge, reversal once again. But based on what we saw here, even these smaller ones here that might be hard for you guys to see through our OBS right now, but they weren't just completely isolated. There were a group of them here, a lot of them here too, and we're starting to see a similar group here. Yeah, it's not just the one spike. It's not an outlier. And we can also look here on our sand trends and see that ADA is our largest trending word at the moment. We're seeing the social volume really go through the roof. You can even see the connected words like Ethereum and Bitcoin. People, likely comparing Cardano's price rally to the smaller rallies of Ethereum and Bitcoin. And based on history, Dino has done a great back study and reported on this maybe 6-7 months ago about how when any project, any ticker in particular reaches top 3 status, it's a sign that a correction, at least a mild correction, could be imminent. It means that the crowd is recognizing that the price is surging and FOMO is taking place. That's almost always the reason why a project is in the top 3. Yes, sometimes there's an exception and could just be fundamental related or news related. In this case, ADA is 100% the top trending coin because of its price rally and it being a top 10 asset and people recognizing that and wanting to get in on the rally. So usually when crowds get in, it can be a pretty clear indicator that a reversal is upcoming. Doesn't mean it's going to happen within the hour of us talking about it, but it means that without a huge increase in on-chain activity that really justifies it, there's going to be a decline at some point. And on average, Dino, correct me if I'm wrong, it's around 12% over the next week once something gets in the top 3. Do you remember the exact number?
Yeah, I think it's minus 10.9%. So it wasn't done by me, it was done by our data scientists. But yeah, this study that we've done maybe 5 or 6 months ago, we've looked at the about 350 different times that a coin sticker or name has appeared on this list of top words within the social volume as a parameter. And it wasn't a week, it was actually 2 weeks, 20 days after a appearance of a coin's name or ticker on this particular list, the average price of the observed coins has dropped by 10.9%. So this is on a sample size of 350 different coins. So it's a pretty sizable sample size. Now, Brian, I think another sort of good way to visualize just how big ADA's social volume is right now is to zoom out to the last year of ADA's data, because I think it's definitely telling a story. Not necessarily a story that some ADA holders would like, but yeah. So first of all, maybe just remove social dominance for starters, just so we can see a bit more clearly where social volume is at the moment. So yeah, I mean, not ideal if you're an ADA holder. Its social metrics aren't looking excellent right now. They are definitely looking a little bit overvalued, or the social metric itself are looking a little bit inflated, which might point to the fact that ADA is currently a little bit overvalued. Now, obviously, there's no silver bullet, and this isn't a 100% guarantee that we're going to see a short-term correction for ADA, but previously, looking at historical trends, several similar clusters of spikes in social volume for ADA have coincided with local price tops. Sometimes the local price top has, the correction was minor, maybe between 5 and 10%, and then we had another leg up. Sometimes it was a bit more dramatic. So all that this metric is pointing to is the fact that a lot more people are talking about ADA right now than they talked about ADA throughout the last 3 months. And the reason why they're talking about it is obviously its price action. And keep in mind that most of these new mentions aren't people, discovering ADA and being wowed by its fundamentals. Most of these mentions are fire emojis and rocket emojis and, calls to pump ADA to the moon. So it points to peak market euphoria and potentially excessive greed and overall irrational confidence by the retail community. So Brian, also if you look at ADA's sentiment, I think there's also an interesting pattern developing. So what we've shown right now, or a minute ago, was social volume, which essentially only tracks the amount of mentions of Cardano or the amount of Cardano-related mentions on crypto social media. What that metric doesn't show is what is the average mood of these mentions, what is the average sentiment of these mentions. And to do that, we've developed our own machine learning algorithm, which takes all of these mentions of Cardano that we collect from over 1,000 different crypto-related social media channels. And the algorithm labels these messages as positive, negative, or ambivalent. So here we're looking, in particular, we're looking at Twitter as a source of information, and we're looking at Twitter-related sentiment towards Cardano. So we have seen over the last 48 hours a massive uptick in the general. So basically anything above zero means increasingly bullish sentiment. This is 0, 1, 2, 3 standard deviations from the mean in both directions. So anything above zero is bullish. Anything below zero is, increasingly bearish. So we are seeing currently predominantly bullish sentiment towards Cardano. Similar, although not at the same level, but this certainly similar to what we've seen on May 14th, May 15th, right before the market-wide correction, and also similar to what we've seen in March of 2021 before another sort of local top for Cardano was formed. So maybe we're not there just yet. However, the social metrics for Cardano are certainly pointing to a very strong reaction from the crowd in relation to Cardano's almost 50% week. So what happens next? I would definitely keep an eye on these two charts. I would not be surprised. Let's put it this way. I would not be surprised to at least see a short-term pullback for Cardano, just for these metrics to normalize, for the crowd to dissipate a little bit, for social volume of Cardano to drop back to normal, for social sentiment to move back into neutral or bearish. Basically, we need a point in time where people stop talking about Cardano a little bit, so that the price action of Cardano can once again move more sustainably in the upward direction. Currently, that's just not what we're seeing.
Yeah, for proof of just how accurate this type of graph can be, take a look at the pretty much the lowest point, or at least the lowest point we had since October 2020. The lowest point occurred here right around July, we'll call it 16th, 17th, 18th. Right when that happened, that was essentially the bottom. This was when people were the lowest about Cardano. And over the last month or so, it's just been an absolute skyrocket. We had a few, bumps in sentiment, of course, but overall, it's usually a matter of time until a huge spike like this happens, and then a huge retracement. Huge spike right here too, big retracement. This one was more minor. And it led to just another larger spike, and the larger spike is what eventually sent the price down. So this is a really fun way to look at just how euphoric versus how much FUD is occurring at any given time by the crowd. And I highly recommend checking out graphs.santiment.net/social should you have a pro subscription or a 2-week trial of Santiment Pro metrics at any given moment.
Right. So just one thing, Brian, before you continue. Guys, feel free to ask us questions in chat about the types of coins that you would like us to look into over the next 20 to 25 minutes. So we're sort of done with our expose about Bitcoin and where we think it might be headed based on its metrics. So we are going to start taking audience questions now, and we'll choose the coins that are getting the most sort of interest within our chat. So I've already seen calls for Chainlink, SLP, a few different tokens. What I would suggest, as I always do, is that you ask us about Ethereum-based coins, because this is where we really provide or have the largest source of data. So on-chain data, social data, and development activity data. We have all three of those data sets for all Ethereum-based coins, whereas for things like Cardano, Polkadot, we are still sort of working on integrating additional blockchains in terms of on-chain coverage. So currently, if you would like us to dive deep into on-chain metrics for coins, make sure that those coins are either Bitcoin, Ethereum, XRP, Litecoin, or Ethereum-based coins, or coins using the ERC20 standard. Any coin that uses that standard, we can dive deep into its on-chain metrics. If not, we can still look, like for Cardano, we can still look into things like development activity and social volume, but we can't do like super granular analysis in terms of its network activity. So questions in chat, and we'll take a look at it in a minute.
Yeah, thanks, Dino. So briefly, I just wanted to point out something very good about Cardano. Whenever Cardano is mentioned, it's worth bringing up the fact that it is consistently among the leading assets in terms of development activity. Here, what I did was overlay Cardano's activity here in purple versus Bitcoin's in pink and Ethereum's in red. And we can clearly see that Cardano on an average day is getting much more development than the top two assets by market cap in crypto right now. And Ethereum on its own is also getting tons and tons of development activity. So for Cardano to be this much above it is actually pretty significant. We have an algorithm that crunches numbers on how many GitHub submissions are being proceeded on a day-to-day basis for any given asset. And we actually filter out the kind of the mundane, updates that aren't really aligned with innovation. We basically are only showing development activity submissions that are actually notable. So
we don't include like comments for stars, basically any non-development related events in GitHub, we don't include into this data because different projects use GitHub very differently. Some of them almost use it as a Slack type of activity, or Discord type of channel, and others use it mostly to push code. So in development activity, what we do is we only look at code-related events. So we don't count comments on issues, forks, stars, etc. So what you're seeing is a little bit more, it is a metric that tries to level the playing field between all different projects. And obviously it makes sense that Bitcoin's development activity is going to be low. Not a lot of necessary for Bitcoin Core developers, or at least compared to other coins. But in particular, I think what's interesting is comparing ADA's or Cardano's development activity with the development activity of Ethereum. We can see this big drop in Ethereum's development activity maybe a month ago. I think we mentioned it at the time. This is because of ETHCC in Paris. At least I believe it is because of it. Right. Because it fits, the timeline fits perfectly. That's where the ETHCC conference was held. So a lot of developers were busy talking about the future of the Ethereum. So we saw a short-term blip in the downward direction. But yeah, Cardano was, according to our data, the most actively developed project of 2020. Overall, the development activity for Cardano has been through the roof over the last maybe 18 months. But in particular, in 2020, in our yearly report, Cardano took the #1 place. So it doesn't surprise to see that of all projects, and we track more than 2,000 different projects in their GitHub repositories, Cardano is leading the way. Obviously, this doesn't, we don't track all GitHub repositories for crypto projects in general. There are projects that have private GitHub repositories. Obviously, we don't track those. And there's a certain subset of projects that use GitLab, and we're still sort of trying to integrate GitLab support. But I think this is still a very good gauge of what projects are still continuing to work on their coins, on their protocols, regardless of market activity. And Cardano has been pushing code like crazy throughout the bear cycle of 2020, sort of the bearish first couple of months of 2020, and throughout 2019 as well. So it's not, the Cardano development team has pretty much shown that it doesn't really matter, rain or shine, what the coin related price action is showing. They're just going to continue to innovate. And this is, from a due diligence perspective, from a value investing perspective, this is the type of project that you want to look for. You want to look for projects that are showing that their team is continuing to work on the roadmap, and they're continuing to polishing the product. They're continuing to add new features, and both for Ethereum and Cardano, this is what we're seeing.
Yeah, the key, as Dino said, is value investing. If you're looking for a short-term indicator to dictate where prices are going to go next, like address activity, circulation, whale behavior, this is not in the same ballpark. This is much more of a long-term validator that the project has legs and it has a team behind it that truly believes in it. And if you're worried about being in a coin that is referred to as a you-know-what coin, this can actually be a very useful metric, because some projects out there, none of which we want to name on the call, often have very low or non-existent development activity with 0, 1, or 2 submissions a day, versus Cardano, where we're seeing it consistently at like 200 to 400 per day. It's not even close when comparing. So Cardano, from a long-term perspective, clearly has a team behind it that expects the price to eventually move up over time because they're actively working to improve and innovate it. So I really like it, and I think it's a good, probably under the radar indicator that we don't even talk about enough on the call, but I wanted to point out because it's something exclusive to our platform. No other platform has it, and it's proven to be a metric that can be very reliable for those who are hodling and value investing for the long term.
For sure.
Last point I'll make before we just jump into questions, Dino, is our MVRV model, and I'll just spend a couple of minutes explaining what's going on here. What this model does is measure 6 different time frames. It's of course going to do a quick refresh right now as I talk. It looks at 6 different time frames: 1 day, 7 day, 30 day, 90 day, 6 month, and 1 year MVRVs, which are the average trader returns during those periods of time, blends them all together and gives an algorithm or an algorithmic output, I should say, to express where the average trader returns currently lie compared to average. The higher and closer they are to this dotted green line, the more likely the projects are undervalued and can surge in price. The closer they are to this red line here, the more likely they are to be overbought and indicative of people kind of FOMOing in or already having so much profit that we're kind of close to a danger zone here. So green is the opportunity zone, red is the danger zone. And we can see that just about half of these assets are in the red. A few of them are actually past the dotted line. Ethereum is one of them, which is interesting because basically these bars, like this white line here, shows that there's a more than double divergence, maybe a 2.5 time the normal divergence of overbought versus just neutral. The 30-day also very, very, very heavily into profit land for Ethereum traders right now. So long story short, we're universally in the orange and red, at least based on these 20 to 25 assets that we're showing here on the model. But if we expanded this to 250, we'd still see the vast majority in orange and red. And particularly the ones that are past the red dotted line, that means they're basically in a top 10, or I guess you can say bottom 10% territory compared to history, when average traders are heavily into profit land. So something just to keep in mind, we have this model available. You can check on it in real time with your Sandbase Pro membership. You can just get the Sandsheets add-on right here, enter your API key, and basically make a copy of any of the models that we have, and it'll instantly load up all the data and give you this chart output that you can check in on anytime. So with that being said, Max, if you want to let us know what metric or what assets people are dying to know more about, we can get into it.
Yeah, so let's take a look at a few coins. It seems like SLP is, Max mentions that the SLP is pretty requested. I can assume.
Yeah, and we updated it, so it's merged now, the old and the new one.
Yep. So this is finally we're sure that we have the correct data for SLP. I assume why people want to know about SLP is because the latest updates to Axie Infinity, I think it was like number 18 or whatever, which basically half the rewards for SLP, right? I don't play Axie Infinity myself, but I think it's like you get half of SLP now while playing adventure mode, and they have increased SLP rewards for PvP players. A lot of people are very well, at least from what I read, both in the Axie forum and Discord and on Twitter, a lot of people are pissed off, especially scholars that have basically are going to see a reduction on their investment and in general the amount of SLP they can gain on a daily basis. But a lot of people have also sort of been behind this this update from sort of the perspective of the longevity of the game and the sustainability of the game. A lot of people seem to support it as well. let's just only, without choosing sides, let's only look at what's been going on in terms of SLP's network activity. And lo and behold, let's start with daily active addresses for SLP. So, I mean, we talked about, I think a couple of weeks ago, I talked about both AXS and SLP having massive, just massive amounts of daily unique addresses interacting with these coins. I think still SLP is probably in the top 5 coins in terms of daily active addresses on the Ethereum. However, the trend is certainly a little bit concerning. So, Brian, where were we here at the local peak? I think it was maybe August 5th or 6th that we had this relatively high spike in. Go a bit right.
Right here, yeah.
Yeah, so that was about 28,000 daily active addresses on August 6th. So if you can, like, from there, just hold shift and drag to the current level of SLP's daily active addresses, we can see that daily active addresses have dropped by 43% in the last, essentially, 8 days. So in a week, a little bit more than a week, the amount of unique addresses interacting with, by interacting with, I mean sending or receiving SLP, has dropped by 43%. Not ideal for any coin, obviously. I think this might still just be sort of a first wave of impressions based on the update, and we might see a rebound in terms of the amount of addresses interacting with SLP. But for the time being, yeah, there's less addresses, a lot more, almost half of the amount of addresses interacting with the coin now than there was a week ago. So if you're looking at trend lines at all, we are not necessarily moving into the right direction, right? Because if you coins or like SLP and projects like X Infinity, they are going to rely on a network effect. So you do want to see the amount of addresses and entities interacting with both of these coins to continue to grow. Last week, at least, it's kind of shown the opposite, and I'm not surprised to see it. So if we look at one other thing that I want to look into, Brian, is the exchange inflow for SLP, because that's what I was very interested in is, okay, how did the crowd react to, or sorry, not the crowd, but the SLP holders, how did they react to these news? So if we can zoom out of those massive spikes right around the local top there on like May 28th or whatever, Brian, just zoom slightly out of those spikes so we can see all of the data a bit more clearly.
You on like the last 6 months here?
So anything outside of this massive spike. So yeah, basically.
Oh, you mean
there,
maybe zoom in right here?
Just zoom in there. Yeah.
Okay.
Yeah. So this is what we're seeing in terms of the amount of SLP that is moving into known exchange wallets. I believe that this large spike has happened right as the update was rolled out. I could be wrong. I don't remember the exact date. I think it was Tuesday, but I could be wrong. So anyway, at least in terms of on-chain data, we have seen a relatively considerable uptick in the amount of SLP moving to known exchange wallets in the last week or so, especially right around that local top here. Now, I do also want to, Brian, look into the supply of SLP on exchanges, because even though this looks quite bad, it looks like a lot of people are dumping SLP. The supply on exchanges actually isn't looking that horrible. Like, yeah, it's been on a slight uptick recently. There we go. So supply on exchanges overall is growing, but the supply on exchanges as a percentage of SLP's total supply is remaining relatively flat, right? So the supply of the coin is growing. However, the total supply of SLP on exchanges measured as a percentage of SLP's total circulating supply, it stayed relatively flat at around 53%. Now, obviously, 53% is still pretty high for a coin. More than half of SLP living on living in known exchange wallets. But we're certainly, at least for the time being, not seeing a massive amount of SLP moving to exchanges compared to the total amount of available SLP. Let's put it that way. Overall, or in absolutes, yes, as you can see, the supply of SLP on exchanges has gone through the roof recently. but so has the general supply of SLP. So you see the total supply of SLP on exchanges as percentage of SLP's total supply remain relatively flat. But yeah, I mean, overall, we're seeing spikes in exchange inflow, spikes in total SLP on exchanges, decline in SLP's active addresses. It's not ideal. Let's put it that way. Although I think it's all just short-term tremors for the time being. I think AXS is by no means dead or anything. I think it's just that a lot of people are feeling a little bit disappointed by this latest update, and I think that it's going to affect the price of SLP. So they're dumping it before SLP dumps, right? So yeah, for now, let's look at the social volume for SLP also, Brian. I wonder if there were a lot of mentions of the coin as the update was rolled out. Yeah, so I would say this latest spike, when was it? Like August 10th or whatever?
Yeah, the 11th.
Right. So I think that's when the update was rolled out. We can see pretty strong move right around the local top, right before the correction. Not surprised at all. A lot of people being disenchanted leads to a short-term price correction. SLP was able to bounce back. Obviously, it's not looking great compared to the rest of the market, while most of the market, and in particular some NFTs as well, have sort of made impressive gains recently, and a lot of NFT indices have performed immensely well over the last week or so. SLP and AXS, well, AXS has done very well, but that's because it's been listed on Coinbase Pro, so we kind of have to have that in mind. It's not, it's because of the listing, but SLP as its in-game token, it's not done particularly well. Last thing, Brian, that we might want to look into is the supply distribution of SLP among different addresses, right? So let's look at the amount of SLP being held by different groups of addresses to see whether, what are retail SLP owners doing versus what are large holders of SLP doing. So yeah.
Let's take a look at absolute.
Mm-hmm. And you can plot the price of SLP as well.
Yeah. Just a little darker. So it might help if we merge a little bit. Do you have some suggestions on maybe grouping them?
I think we can actually go one by one and just show them. You can zoom out and go one by one. And what you'll see, I think, is that you'll see that a lot of sort of very low groups of SLP holders. So basically, anyone addresses holding between like 1 and 10 to 100 SLP, they're sort of reducing their total supply, while the large groups are increasing their total supply. You can actually, Brian, you can zoom out of that one and just basically click out of each group and then click back onto each group so we can see them individually.
Gotcha.
Yeah, that's probably the easiest way to visualize what's going on with large holders versus the rest. So
this is the top one, 10 million plus.
Yeah, so I would assume that this is also a lot of this could be these addresses could also belong, at least some of them belong to Axie Infinity themselves, and it also could be populated by exchange wallets, this last or largest group of SLP holders. So the fact that they are actually increasing in their total balance of SLP basically, I think, supports the idea that a lot of SLP has been being moved to exchanges.
So the next one here is million to 10 million.
Yeah, nice little rise.
100,000 to 1 million.
Yeah.
Same thing.
Yeah. Same thing here.
Yeah. A lot of the big addresses.
Yeah.
Wow.
Here I think we're gonna see drop off. So from 100 to 1,000 and less, I think we're gonna see a lot of addresses actually start declining. Let's see if I'm correct.
Yeah, there we go. 10 to 100 taking profit.
Yeah.
1 to 10 still staying high. That one doesn't even seem to show up. So that's about it. Yeah, so because the price is so tiny, usually about 1 to 10 is about the minimum.
Yeah, maybe zoom into the last 3 months. Yeah, so if we look at the 1 to 10 and 10 to 100, those seem to be, so this one seems to be sort of, yeah, consolidating a bit. 10 to 100 seems to be dropping, but other sort of groups of addresses, especially large groups of addresses, 100,000 to 1 million, 1 million to 10 million SLP holders, they're still continuing to increase their balance. So that would suggest at least some amount of confidence by large SLP holders. They're not offloading their bags just yet to exchanges. So yeah, that I think is a healthy sign. What's not a healthy sign is the almost 50% decline in the amount of addresses interacting with SLP on a daily basis and a rising supply of SLP on exchanges, at least in absolute numbers. But I think it's far from a dead game or whatever. I think it's just a sort of short-term reaction to the news that not a lot of people have enjoyed. All right, I think we can also look at Chainlink. This is another coin that we have received some requests for. So Chainlink has kind of been, and actually we can compare the amount of activity. I think that will be fun. Let's look at the amount of addresses interacting with Chainlink. Okay, let's remember SLP's active addresses, even with this 43% drop, there was 15,000 addresses interacting with SLP. How many are interacting with Chainlink right now? 5,000.
5,000, yep.
Yeah, so that kind of just shows you how ridiculous this SLP, this X Infinity mania has really been, right? Chainlink used to be the most active project in terms of network activity on the entire Ethereum. Obviously, if you exclude stablecoins, USDT, USDC, and DAI, Chainlink used to be the big dog. It was the coin with the largest sort of daily sort of value transfer, the largest amount of addresses and entities actually moving a Chainlink between addresses. However, it's now sort of been relegated to this sort of second level of activity. It's still a great coin in terms of on-chain activity. Like if we look at, Brian, maybe zoom out to the last year, let's just see where Chainlink's daily active addresses are compared to the last year of data. I think we're going to see a big decline, which is not surprising. So, Chainlink's daily active addresses have commonly been above 10K in the first sort of 3 to 4 months of 2021. However, ever since the correction, there has been a clear sort of downslide in the amount of interest in the coin, in the amount of demand in the coin on a daily basis. And we're still sort of not seeing a propensity for this to increase, even though the price of Chainlink is starting to rise slightly. So this is, I think, what we're going to see in a lot of different coins. We've seen it for Bitcoin, we're seeing it for Ethereum, we are now seeing it for Chainlink. Prices are starting to rise, but the network activity is still lagging. So yes, it's great to see some recovery and relief pumps for a lot of these coins, but are we really seeing, the general sort of network activity and address holders? Are we really seeing the revival of network activity? Are we really seeing the same amount of new blood moving into things like Chainlink and Ethereum and Bitcoin now that was compared to what we've seen in January and February of 2021? It doesn't seem like we are. So that's why it's a little bit concerning that the prices are rising into a relatively laggy network activity. And yeah, that's where I would leave it. I would leave it at that. So let's also, Brian, look at the Chainlink's MVRV ratio, which I think is something that we haven't really talked about today much. And I think it's a very important metric to look into. So MVRV ratio, for those that are not familiar with it, is a popular on-chain indicator. Essentially, what it does, or what it tries to do, is it tries to visualize the average profit or the average loss of a certain group of addresses. So for example, here we're looking at the 30-day MVRV ratio for Chainlink, which currently stands at about 24.5%. So that means that the average profit of all addresses that have acquired Chainlink in the previous 30 days, so basically short-term traders, is plus 24%. So they're basically, plus 25% of their initial investment, right? So if we, Brian, maybe zoom out to, let's take last 3 years of Chainlink data. So basically it's the entire history. The way that some people use this metric is the higher the MVRV ratio, the more unclaimed profits there are. And as a result, the more risk there is that people or holders are going to start claiming these profits. And as a result, applying sell side pressure, right? And then so basically what that means is that the higher the MVRV ratio is, according to this metric, the more overvalued the asset. And then the lower that the MVRV ratio is, the more undervalued the asset is according to MVRV. So what we can see, or basically the way that people use this metric, is they look at historical tops and bottoms for MVRV to sort of determine historically established danger zones and potential opportunity zones, right? So currently we see that Chainlink has recently, I think maybe a week or so ago, has peaked in terms of its MVRV ratio. It's hit about plus 30% almost, and that 30% seems to be a fairly high level for Chainlink's MVRV ratio. It's pretty much the exact same point in which where we were during the April all-time high for Chainlink. And in general, yeah, when Brian draws the line here, in general, there have been relatively few days that Chainlink's MVRV ratio has remained above 30%. And when it does, it usually doesn't last for very long. It only lasts for a couple of days before we see a strong sort of pullback in order for this metric to normalize. So currently we're at about plus 24%, so 25%, suggesting that, we're still in sort of this potential danger zone for Chainlink's MVRV ratio. So we're not in this upper echelon, so plus 30% and above is sort of a clearly established danger zone, but we're getting very close. So if Chainlink does manage to pump an additional 5 or 10%, we are probably going to see its MVRV ratio get into that plus 30% zone, meaning that its short-term holders are about plus 30% on their initial investment. And historically speaking, that seems to be the level at which Chainlink short-term holders have shown some tendency to start taking profits. And then that's going to be very difficult potentially for Chainlink bulls to absorb in the short term, leading to a quick correction. So that's as far as Chainlink's 30-day MVRV ratio is considered, Brian. But let's also look at its long-term MVRV ratio. So here we've been looking at the average profit margins of short-term Chainlink holders. But what if we look at the 365-day MVRV ratio for Chainlink? Here, we're going to be seeing what is the average profit of addresses that have acquired Chainlink, or all addresses that have acquired Chainlink in the previous year, in the previous 365 days. And this is a slightly different picture. We're at a plus 9.1%, suggesting that, yeah, the sort of long-term holders of Chainlink are slightly in profit now after basically being underwater for last 2.5 months. But we're still ways away from historical highs, right? And by the way, the 365-day MVRV ratio does tend to, or it shows a tendency to sort of have lower peaks throughout every subsequent bull rally. The reason for that being is that with every subsequent bull rally, coin holders and in general, sort of first of all, the crypto market matures and coin holders come to expect lower returns. Like people don't expect the same returns they do today like they did in 2017, at least on average, right? So there is a tendency for MVRV ratio to sort of flatten out a bit over time. And with that being said, there's definitely more room to the upside in terms of Chainlink's long-term MVRV before it gets into trouble. But it's no longer undervalued. So, for example, when it was minus or almost 50%, we can see that those were very historically low levels, right? What was that? Yeah, minus 40%. There we go. So those were historically low levels for Chainlink's 365-day MVRV ratio. I think the lowest since December of 2018, suggesting that historically speaking, this seems to be a potentially interesting time to accumulate Chainlink, and so far that has proven itself to be the case. Currently, we're no longer in that undervalued territory. You know, we've gone from minus 40% to almost plus 10%. So Chainlink holders, long-term Chainlink holders, are no longer underwater. They are in profit, on average about plus 10% in profit. And even though those are not massive profit margins, if they are sort of concerned about Chainlink's future potential or the stability of the market, they might start claiming those profits regardless. So yeah, this particular chart doesn't look all that bad. The 30-day MVRV ratio is what is a bit concerning, and I think it might lend itself to a short-term correction for Link. Last thing that we might want to look into, Brian, is Chainlink's exchange inflow and social volume. So basically, let's see what whether there are people selling Chainlink now that it's starting to rise, and it doesn't seem like it. Overall, at least, yeah, it doesn't seem like we're seeing similar to Bitcoin, right? It doesn't look like there's a clear interest to sell the Chainlink at the time. What's the supply of Chainlink on exchanges overall? Is it rising or declining, or is it sort of staying the same?
Looks like it's rising at the moment.
Oh, okay. So what that would suggest is because there's not a whole lot of exchange inflow, at least like Brian showed, the exchange inflow is relatively low. This would basically suggest that there's a lot of there's even less withdrawals of Chainlink from exchanges. So the fact that the supply of Chainlink is rising is also a potentially concerning signal, because it suggests that people are starting to move their link to exchanges, and there are not many reasons why you would do that while a coin is pumping, right? The main reason why you would consider moving your hard-earned link to known exchange wallets is to take advantage of the rally and start offloading some of your bags and claiming some profit. So the fact that Chainlink supply in exchanges is rising, its daily active addresses aren't really keeping up with the price, and we're also seeing its MVRV sort of move into a danger zone. Slightly concerning signals for Link at the moment. Obviously, doesn't necessarily mean that Chainlink is going to encounter a correction, but you know, personally, I would like to see some of these indicators look a little bit different. In particular, I would like to see the amount of interest in Chainlink overall as an asset start to appreciate once again on a network level. So I would like to see its daily active addresses, its circulation, its transaction volume start booming again, so that we can say, okay, there's truly on a network level, there's some fundamental justification for this rise, basically almost a 50% gain for Chainlink over the last 3 weeks. Currently, we're just we're not seeing it, Brian.
Nope, not at all. This was what we wanted to see right back here in mid-September, late August, early September, I should say. And then right around here, pretty much right after the all-time high, dropped off a cliff. It's been people moving to exchanges still, and that trend hasn't stopped yet.
Yeah. So I think that's going to do it for today. We're already 15 minutes past our curfew. So thank you everyone for joining us. Max, if you want to briefly shoot up that thumbnail to let people know how they can claim 25% off Sandbase Pro. So everything that we talked about today is available. All of these metrics and about 100 different metrics on top of what we talked about is available on app.santiment.net. The link is in the description of this video. You get 2 weeks free for the entire platform to test everything on our site for 2 weeks. And after that, it's $49 a month, which is one of the most affordable sort of websites for on-chain data. And we are also one of the only providers of social data and social activity and sentiment data for cryptocurrencies. So to me, it's a no-brainer. But even if that's too much for you, you get 25% off for your first billing cycle by using the code TWIC, which stands for This Week in Crypto, the name of this call, when going into checkout. So if you're not already a Sandbase Pro subscriber, make sure you take advantage of the offer and then join our Discord. We have a specific group, special group for our Sandbase Pro users where they discuss general state of the market and various charts that are available on our platform and other platforms, and we talk about what seems to be going on with the market and where the market might be headed. So Brian, anything to add before we end the stream for today?
Yeah, there's also a 2-week free trial, guys. So even if you aren't sure about getting Sandbase Pro, you can make an account with us if you don't have one already. and enjoy 2 weeks free of everything we're showing here today in real time, including these Sandsheets models. And you can get familiar without having to immediately jump in as a paid member.
Right. Thank you everyone for joining. If we have not managed to get to your coin, just ping us in Discord in the Sandbase Pro subscriber group and let us know, if you want more information on a specific coin that you're interested in. Until then, or sort of until next week, thank you, Brian, and thank you, Max, for joining me. And we'll talk to all of you guys in 7 days. Thanks, guys.
Thanks, everybody. Have a good weekend.